Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. Today's Monday, July 28th, 2025. And look behind me, the water, not even a ripple in the water behind me, but there are clouds above, right? Suggesting that a brewing storm may be coming, or maybe it's going to clear up. We'll see as the day goes on. It is early. It's only 8 o'clock in the morning, so let's see, because so much can happen. But here are the things you need to know to get your day started. And so the push higher continues yesterday on Friday, right? The S&P nearly kissed 6,400. Now this week, it's a big tech week, right? And there's a bunch of others as well, but tech will be on the minds. The EU and the U.S. have a trade deal, 15% tariffs, not 50% that some were screaming about. Bonds are up, oil's down, gold is down. And what do we have at dinner tonight? Well, it's a side dish. We're going to have the peach burrata bruschetta. It is delicious. Okay, look, Wall Street capped off a week with making fresh all-time highs, fueled by strong corporate earnings, optimism around trade negotiations, investor confidence that continues to defy all warnings about overvaluation as the VIX continues to sink. It was down 3% on Friday, closing at 1493, a level last seen in December of 2024. This suggests a level of such complacency that it is screaming that we are overdue for a pullback. The S&P teasing 6,400 before ending the day up 25 points or 0.4. This as we enter the busiest week of earnings season, right? Its relative strength index is now at 76, spot 213 on, or 8% above the overbought line of 70. I'm just saying. Now, the Dow gained 208 points or 0.5%. The NASDAQ added 50 points or 0.25%. The Russell added 9 points or 0.4%. The transports gained 183 points or 1.1%. The equal weighted SP up 37 points or 0.5%, while the Mag 7 keeps marching higher, up another 131 points or 0.5% on the day. Now you ask why? Well, it's a convergence of factors. It's a resilient economy, right? Think the strong economic data. It's a historically high rate of earnings beats. Over 80% of the S&P 500 companies that have reported are beating expectations. And there are signs of progress on a key U.S. trade deals, including a pending agreement with the European Union. We're going to talk about that in a moment because, in fact, there is a deal. Now, these tailwinds have helped investors brush off concerns over valuations and speculative excess, including the return of trading of meme stocks, right? Think Open, Donut, Cold Stores, Rocket Mortgage, G-Pro, right? And increased activity in low-quality names. Think micro-cap and small-cap names, and that's always a red flag. Now, the market's gains aren't without its skeptics. Many are warning that complacency and the fear of missing out and looser monetary and regulatory policies could sow the seeds of instability. Bank of America sees asset bubble risks, while Morgan Stanley warns investors not to be lulled by low volatility and rising prices. Sounds like they're mimicking my calls of late, right? Just to be patient, because I've been saying that now for a while. This week is packed with potential market catalysts, ongoing big tech earnings, think Microsoft, Meta, Apple, and Amazon, along with United Health, Coinbase, Eli Lilly, Qualcomm, Visa, Procter & Gamble, and Boeing. We have the latest Fed rate decision, which comes on Wednesday at 2 o'clock. Will JJ cave or not? That's the big question. Thursday brings us the June PCE price index, which is the Fed's favorite inflation gauge. Friday is going to bring us the July jobs report. And in August 1st, EU-US trade deadline, although that appears to be a non-event right now. Any one of these could either disrupt or continue to fuel the rally. Now, while Trump's recent meeting with Fed Chair Jay Powell was low drama, some would classify it as high drama, it did spark more rate cut talk. Trump pushed for low rates, of course he did, while JJ gave no indication that this was happening. The bookies are expecting the Fed to hold steady this Wednesday, right, while possibly signaling a September rate cut. The issue is that while inflation is benign, the labor market remains strong. Tariffs, which many expected to cause surging inflation, have not done that at all, and this just might justify the easing come the fall. And that pending trade agreement, well, that's now a massive deal, just ahead of the August 1st deadline. Over the weekend, Trump and European Commission President Ursula von der Leyen announced a trade deal that imposes 15% tariffs, not 30, not 40, not 50%, as many had feared, on most of the exports coming out of the EU. Ursula tells the world that this deal will bring stability and predictability. In addition, the EU also agreed to spend $750 billion on American energy products while investing another $600 billion in the United States. Now, as you can imagine, there are 27 countries in the EU bloc, and some of them are just not happy. Stevie Olson, former U.S. trade negotiator, had this to say: the EU sees value in a healthy, robust, and open North Atlantic trade relations. President Trump does not. This simple dynamic put the EU behind the eight ball throughout these negotiations. So that sounds kind of like negative. Okay. A major German lobby group saying it sends a fatal signal to the closely intertwined economies on both sides of the Atlantic. Italy's Giorgia Meloni, though, she's holding back on commentary until she sees the final deal, though she appears to be in favor of it. In the end, Ursula did say that this was the best that we could get, which sounds a bit negative, but let's just not get hysterical just yet, right? This needs to play out. Expect all kinds of arguments, both pro and con, on all week long, coming from all parts of the world around this latest headline. And I'm sure it's going to go on for more than just this week. Now, while this is far from over, it does seem to be moving in the right direction. So the August 1st deadline is now off the table. So that's a negative catalyst has been removed from the equation. That's a positive, right? Now, bonds, they rallied. The TLT was up 0.6. The TLH was up 0.5%. The AG was up 0.2%. The 2 years at 3.9%. The 10 years yielding 4.37%. And the 30-year remains at 4.91%. 30-year conventional mortgages are now between 6.6% and 6.8%. Five-year 6-month ARMs are now yielding 6.03%. Oil ended the week at 65.07, down 1.5% on the week, although it was all over the place midweek. It was as low as 64.70, as high as 66.70. This morning, it's up 50 cents at 65.57. Now, we remain below the long-term trend line support, which is at 66.05. OPEC Plus is set to increase production in August and then again through the fall, so that's going to put more pressure on prices, unless, of course, what? Demand remains robust. My sense is that we're in the very tight range of 62.80, 68.14. If we break below 62.80, then the next stop is going to be $60. That said, let's not forget, demand remains strong. Gold fell by $35 or 1% on Friday to end the day at $33.93 as we moved into the weekend ahead of these negotiations. They took gold down and through support at 34.07. Now, you got to ask, did the gold bugs know something the rest of us didn't? Last Thursday, we broke out of the apex of the triangle, and on Friday, we reversed course and broke down through the apex of that triangle, right? My sense is that if the trade deal is a trade deal, then we should see gold settle down a bit, right? Which takes that angst off the table. We should find support in gold at 33.25. And the VIX, well, that remains well in the complacent zone. For me, that's a red flag. It just says, slow down, be patient. Remember, you are invested. So if the market rallies, you are benefiting. So you put some money into your government money market fund, which is going to earn you 4.25% for now, and just wait for the pullback. Remember, it's now the August, September, October timeframe. It's usually a weak time of year for the markets. So there's no need to chase anything. And even if JJ suggests the September rate cut is coming, guess what? It won't be a surprise because the market's already pricing it in. U.S. futures are up. Dow's up 70, SP's up 16, Nasdaq is up 105, the Russell's up 12. No surprise here, right? You're going to think the EU and U.S. trade deal as a factor. And remember, we still have the ongoing U.S.-China trade deal negotiations that's taking place right now and also moving in the right direction. It's a big tech week. Expected to hear more about what the role of AI is going to play in our lives next week, next month, next year. And guess who else is up? All of the European markets are higher. Spain and Italy vying for the lead, up 0.9. The Eurostock up 0.8. France is up 0.6. Germany's up 0.4, while the UK is ahead by 0.1%. Now, while it's not all signed, sealed, and delivered yet, the agreement was broadly in line with what the smart money has been betting. Now, while that's all good, it's also a big earnings week across the zone as well. So just sit tight before you start making all kinds of decisions. The SP closed at 63.88, up 25 points. This morning's action suggests we're going to push higher, at least on the opening, but I still think it feels a bit tired. So I'm in the be patient camp. Recall that the S&P is now in overbought territory. The Nasdaq's in overbought territory. The Mag 7's in overbought territory. While the industrials, the SMIDs, and even the transports are not in overbought territory. Any pullback by the broader market is going to take the whole place lower, right? That tells me, again, sit back, don't chase, let the market come to you, and let the market work for the money that's already invested. You want to talk about a strategy? Let's review the plan. Call me for a complimentary, no obligation analysis at 561-931-0190. Okay, so what do we have for dinner tonight? Well, this is kind of a side dish or an appetizer dish. It's really great in the summertime. It's grilled peaches with burrata bruschetta. It's a summer favorite, simple to make, and it works well for any summer dinner, either outside on the deck or even at the beach. Now, for this, you're going to need a baguette that you're going to slice it into rounds, right? You need thin sliced prosciutto. You need fresh burrata. You ripened peaches. You need salt, olive oil, fresh thyme, and you need honey. Begin by slicing the bread, brushing it with olive oil. Set it aside. Now slice your peaches. Set those aside. Now take out a grill pan, the one with the ridges in it. Heat it up, get it all nice and hot, and then grill the bread slices on both sides, just so you get the grill marks that gets a little bit toasty. When it's done, take them off, set them aside. Now take the peach slices, grill them also in the pan, just enough that you have nice grill marks on both sides of the peaches. Take the peaches off, put them in a bowl. Season the peaches with a bit of salt and a splash of olive oil. Toss it so that it's all coated. You don't want it dripping, you just want it coated, right? Now take the bread, the toasted bread. Slice the burrata open to expose the creamy cheese on the inside. Place a spoonful of the burrata on the bread. Top it with a slice of prosciutto and then 2 slices of peaches. Drizzle that with the honey and season it with fresh thyme. Just a little, not a lot. That's it. Bang, you're done. Just serve it. It is delicious. Trust me, you will love this dish and you can thank me later. In any event, it is Monday morning. Like I said, it looks a little bit cloudy and gray out there, but let's just see if it clears up for the day and for the trading day as well. Until tomorrow, take good care.